It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, June 22nd, 2016. We have some exciting, active markets and plenty of trading opportunities ahead of tomorrow's Brexit vote. Crude oil and S&P are both bearish, while gold is sideways and euro is quite bullish going into this highly anticipated Thursday's trading session. You know how we do it, though. Before we go into charts and take a look at strategies for tomorrow, the only place to watch the full-length version of this newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, that's wonderful. There's a link right in the description of the YouTube video, and that will take you over to our blog here at Sideways Markets. We can watch the full-length version of our nightly newsletter. Don't forget, while you're here on the blog, grab your free pass. Come out and join me as a guest in our trade room this week. Free pass, upper left-hand corner, if you're not a member here already of School of Trade. Also, don't forget to register for the mailing list, your name and your email address, and I'll send you an email every evening right around 7:15, 7:30 when the nightly newsletter is ready to be watched. Below the video tonight, you can see a spot to download all the charts you see me using in tonight's video. Download all those charts by following that link on the blog below the video. And of course, over on the right-hand side, get the who, what, where, when, and why. We are the #1 trading website and community online. Join our free trial on the website on the right-hand side there. You'll learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. And don't forget, I'm here standing by to help you out with any questions you may have along the way. Use that live support button on the right-hand side of the blog. Got a busy day coming our way. Highly anticipated Brexit vote coming out tomorrow. Let's take a look first at the schedule for tomorrow, and then we'll go into charts, and we'll put together the plan for tomorrow. Now, first of all, tomorrow is the highly anticipated Brexit vote. But in all reality, we're not going to get the actual number until the polls close at 5 p.m. Eastern time tomorrow. So tomorrow is a bunch of anticipation. I'm expecting it to be much lower volume than normal as traders step aside and let the shenanigans begin ahead of this Brexit vote tomorrow. But again, I don't anticipate we're going to hear much except maybe some unofficial exit polls until late in the day tomorrow. We'll probably be talking about this once again in tomorrow night's newsletter. The polls close at 5 p.m. Eastern time, which means unless you're with me here on the west coast of the U.S., probably not going to see anything right until early Friday morning. So Friday is probably going to be the day where we get the bulk of the reliable movement. So stay tuned for that. We'll talk more about that during tomorrow night's newsletter. Tomorrow, though, I do expect tomorrow to be a relatively low volume scenario as traders. Again, we talked about this earlier this week. Make sure you contact your broker if you're trading gold, euro, or pound futures because they are doubling and tripling margins right now. Make sure you contact your broker if you are trading any of these markets, gold, euro, or pound, ahead of tomorrow's session. The big deal for tomorrow, though, is going to be low volume. I'm expecting to see lower than average volume, which means you've got to be careful tomorrow. If it's very, very slow, that's low volume. It can easily spike up or spike down. When you have low volume combined with high volatility, it's a recipe for danger for a new trader who is not experienced yet or paying attention. The bottom line is tomorrow is a day to keep it close to the vest. Keep it simple. Keep it conservative. Tomorrow's not the day to go increasing position size. Tomorrow's not the day to be going out and moving from your simulation to your live account. Don't do nothing different tomorrow. Follow the plan. Follow the plan. And remember, like I've been saying all week this week, personally, I think there's a lot of puffery and lead up into this news event. I don't anticipate this to be as big of an explosive environment that all the news media wants you to think. So keep it simple. Don't overreact. If you don't feel comfortable tomorrow, right, if it is too slow, not to worry. One of the beautiful things about being a trader is we'll be right back to do it again the following day. And don't forget, I'm going to be opening my trade room tomorrow morning at 8 a.m. Eastern time. We'll do it all together, right? If you don't have the experience of this stuff yet, don't put real money on the line. get education and make sure you're doing it the safe way tomorrow. And again, we'll talk about this again on Friday. Now that you've got the warning, right? Now that you have the warning for tomorrow, let's take a look at this calendar. No major news out of the Asian session going into tomorrow's session. No major news out of Asia. Again, tomorrow pretty much all day will be pretty much overshadowed by the Brexit vote, which we're not going to hear about until the very tail end of tomorrow's session. We'll probably be saying the same thing tomorrow night in tomorrow night's newsletter. But again, with that kind of variable lingering out there, I am definitely expecting there to be lower volume tomorrow. We do have some major news tomorrow morning in Europe, 3 o'clock, 3:30, 4 o'clock, although I do not expect it to have much of an impact for obvious reasons we talked about already. Tomorrow morning in the U.S. session, again, we'll be opening up our trade room at 8 o'clock tomorrow. We have major news from jobless claims at 8:30, minor news at 9:45, and more major news at 10 a.m. Now remember, jobless claims are kind of a joke these days because everybody knows people are leaving the workforce right now. These numbers are skewed. The last time we saw jobless claims actually move the market was like 2006. It's been a very, very long time. So I'm not anticipating jobless claims to have much of an impact tomorrow. If anything, the big number tomorrow should be that new home sales at 10 a.m. Just because the PMI manufacturing flash is just not a very big news report tomorrow. The bottom line is we've got some early morning news, some late morning news in the U.S. session. And again, don't be surprised if we have a little bit of sitting on hands and lower volume tomorrow as all of the markets. And don't forget, contact your broker about gold, euro, and pound. Make sure you guys understand margin changes that did come in effect this week. Now, this is always going to be tough for me. I have a big news event coming. We're expecting lower volume, increased volatility, so be careful. As you can see right now, as the markets are opening up in Asia right now, we're getting big spikes. We've got gaps all over the place right now. This is definitely a recipe for some danger here right now. Crude oil, we'll go crude, S&P, gold, and euro. Again, careful tomorrow. Careful tomorrow. Don't go gambling away all your trading capital before you actually get the education, the knowledge of how to do this successfully. Crude is bearish and trying to retest the triple down target from earlier this afternoon, and we know sellers will be looking for opportunities above resistance levels overhead, while buyers have the opportunity to send price higher on this next pullback. As you can see here, as the market opens up, a big spike higher here. So we definitely know this is a bearish market, right? It's very obvious this is a bearish market. Some of the most important clues, some technical clues right now. First of all, we have a bear spike in channel. We talked about this earlier this week, right? Spike in channels tell us to follow the direction of the spike. They also tell us to look for selling opportunities up at areas of resistance right now, all those prior swings. And you can see that's exactly where we are at this time. Furthermore, you can also see that we've already achieved, the sellers achieved their triple down target. And of course, the sellers will be looking for a retest of that low right now. Anytime we have a very obvious, well-defined trend, we can assume there are going to be what we call swing sellers waiting above all of these resistance areas overhead. There is the resistance trend line overhead as well. And really, this next pullback is probably going to make or break whichever direction we go next. As you can see here, we get this little bull channel, right, that we've drawn out here, and you can see how it's trying to break through and hold above the high of that channel. We definitely call that an overshoot. Really, in my opinion, if the buyers can hold this next pullback, little trap low, if the buyers can hold this next pullback, we then expect them to revisit this high again, right? So look for those buyers. If you're a bull right now, look for that trap low, right, below that area of support. That will also line up with the low of that bull channel. Trap low, buyers buy the pullback, look for a retest of that high, and probably an attempt to go back to 50, 50.35, and of course, the high of day at 50.54. The one thing, though, that I want you to remember, though, if you're a buyer right now, is that sellers are going to keep trying to sell this market until they can get and stay above the battle zone. The battle zone being about halfway, right, off that low, and of course, coming right into that falling trend line. So buyers buy low, again, trap low, that pullback. That's one option for the bulls, or breakout, pullback above the battle zone. Those will be the two most reliable opportunities now, right? If you're going to be a buyer. Sellers right now, as this price goes lower, we assume there are going to be buyers trying to buy that pullback. Sellers will be looking for those buyers to fail, to revisit that low, 48.40. That's the ultimate objective for the bears right now. If the buyers do hold this pullback, sellers will then be looking once again up in the battle zone to send it lower. And again, I really wouldn't count out the sellers in this market until we can get and stay above the battle zone overhead, right? Get and stay above and try to use that trend line, right? That trend line will be what the bulls will be using as support to try to hold that pullback with a target back at that high. It really comes down to right now, what's going to happen on this next pullback. Can the buyers hold the next pullback or will they fail? That really will tell us where this is going to go in kind of the short term to medium term. And then, of course, we'll be with our students tomorrow morning at 8 o'clock Eastern time, and we'll take it from there. Boy, the S&P, big gap up. Kind of took the words out of my mouth right now. Even the S&P, bearish and trying to finish off a measured move this evening, but they got their double down target, right? That double down support level was holding strong into the close. As I'm recording this video right now, we just opened up after 6 p.m. Eastern time, and of course, we expect to see either the breakdown pullback or a trap high for the most reliable selling opportunities tomorrow. Now that we have more information, now this really, it's almost identical to crude. It's all going to be, can the buyers hold this pullback? Can they hold this level right now? Big gap up. That means the gap fill is back at that low at 77 even, 77 and a quarter. Right, pretty big deal when we gap up like this. We don't see this very often, folks. Remember, the markets are only closed for 45 minutes in the electronic trading hours. So this means there's a lot of pent-up bullishness or a lot of sellers that are getting out of their positions ahead of what is expected to be a somewhat low volume and range-bound, unpredictable session tomorrow. Here's the reality, right? Here's the reality. Technical clues right now. We have a few channels. First of all, the minor channel that came down, if you're a student of mine, we have a break and a retest. They got their job done, right? The sellers accomplished their mission. They revisited that low. At the same time, the double down, we just talked about this on crude oil, right? When the market, and we talked about this earlier this week as well, when the market achieves an objective, in this case, go back to crude here, when the market achieves an objective, right? The objective for the sellers was to finish off the double down. They're going to look for that two-legged correction and then back down to that low again. We have some news that's shaking things up right now, right? So it's not going to be your typical scenario. But whenever the market reaches an objective, in this case, a triple down on crude oil, on the S&P, it's a double down support target. That's their objective. When the sellers reach their objective, they're going to take their profit. The buyers will start hunting for bargains. And what we do is we look for a two-legged correction back to an area of resistance, and then back down we go to revisit the target back at the low. That's why I said on crude oil, right, it's got a hold, right? If they can hold it, then they have potential here to send this price back higher again. But if they can't hold this, though, that's where we expect that price to revisit that low. Again, because your typical scenario, and even though right now it's not your typical scenario because this darn Brexit vote we're going to get through tomorrow, right? We've talked about that already. Everything's a little bit different than what it really will usually be in your typical scenarios right now. Again, on the crude, it all comes down to can they hold that pullback. If they can't, right, they're going to revisit that low again. Now, on the S&P, they already did this. As you can see, the double down was the objective, right? They got their double down objective. They trapped high. You can see it right here, right? Two-legged correction. Back to an area of resistance, and then back down we go for that double down. So the most important thing is that the bears already got their job done. That's what I want you to understand with this. The double down, right? The double bottom into a double down, right? Sellers take it once, trap high, finish the job. Classic double bottom into a major objective of support. We talk about this in the newsletter all the time. We talk about this throughout the trial. We cover it obviously in our advanced course here at School of Trade. It's very, very typical. From there, we then need to see where we go from there. Do we break down, hold the pullback, and go? That'd be a breakdown pullback into a triple down or a measured move.